Welcome to day number 2 of the TradeLikeVu free bootcamp, where I'll be going through what trading actually is and set the foundations of how you can actually become a consistently profitable trader in the markets. So let's not waste time and jump straight into it. So let me give you an introduction to the world of trading from the basics to the right mindset. All right. So trading is not fast money. You need to understand that trading is not a get-rich-quick scheme. Actually, it's easy to understand, but very hard to master. Just like martial arts, you learn the rules very quickly, but mastery is a lifelong journey of continuous improvement. All right? What do you think? Why are so many people in the trading space unprofitable? Like 99% of all traders are unprofitable. Why is that? If it's so easy to understand. Okay, so what you basically need to understand is that you're never done. All right, even experienced traders are constantly evolving. Those who stop learning will fall behind inevitably. So what to actually do is to stick to a fixed risk management, because that is everything. Even the best traders can lose everything through poor risk management, no matter how good their strategy is. All right, so what is trading? Trading means the buying and selling of financial instruments. That can be stocks, crypto, commodities, currencies, with the goal of making a profit, of course. All right. And within this free bootcamp, we will be focusing on day trading. Okay. So the trading positions are opened and closed within a single day. The focus is on short-term price movements, not overnight risk. All right. So what you need to do in order to become a profitable trader first is to understand which trading style suits you best. And to do that, you need to understand what type of personality you have. So don't ever fight against your own personality, because trading is a very personal thing. That is actually also the reason why most of the traders are unprofitable, because most of the traders try strategies that are not like suiting to their own personality. Okay, that's why they can't stick to that strategy for a longer period of time, because it doesn't fit with their personality. All right, so choosing the right style is very, very crucial. And there are 3 different types of traders. The first one being scalpers. Okay, so they are in and out within minutes. Okay, basically like 1 to 30 minutes. And this type of trading style is ideal for impatient personalities who are able to make many quick decisions within a shorter period of time. Okay. Next up, we got intraday traders. Okay. Their trade duration goes from 30 minutes to a couple of hours. Okay. These are only like basic guidelines. Okay. Don't take them too seriously. So it's around 30 minutes to 4 hours. Okay. And this is basically the balance between speed and analysis within a single trading day. And most of the traders out there are inside of this category. All right. And the third and last category are swing traders. Okay. They are holding positions over several days or even weeks. Okay. And this type of trading is ideal for traders who prefer more time for analysis and want less screen time and less decisions. All right, so you need to understand all these 3, and also you need to choose which one you would like to do the most, or like find out which one fits your personality the best. Okay, now, so how does a trade work technically? There are only 2 types of trades that you can do within the markets. The first one being longs. Okay, going long means you are buying an asset. So for example, you are buying something like the Nasdaq, okay, at a price X, and then you're expecting it to go higher just to sell it for a profit. That's it. That's going long. That's buying an asset, okay? And the opposite of that is going short or selling, okay? That's the exact opposite. So you profit from falling prices. So you buy a certain asset and you sell it you sell it for a higher price, and then you buy it for a lower price. All right. So how does a trade actually work technically is that you place an order. Okay, you place a buy or a sell order. This order is received by a broker, by your broker, whatever it is, Okay, it depends on if you're trading Forex or CFD or if you're trading US futures. So if you're trading US futures, this order will be forwarded to the central exchange executes, okay? So to the CME platform, for example. So how does it look in real life? So for example, you have your trading account connected with TradingVu, all right? You place your trade within TradingVu. This trade gets redirected to AMP Futures, which is your broker, and your broker redirects that to the CME group. So every order passes through this exact chain in milliseconds before it is executed in the market if you are trading US futures. If you don't trade US futures, if you trade like CFDs or Forex or whatever, there is no CME group, there's no central exchange because the broker is the one who will give your order to the liquidity pool, all right? So what you need to understand is trading is 90% psychology, all right? That is also the reason why 99% of traders are stuck, are unprofitable, and seemingly can't become profitable. You need to think about it. If strategy, if trading knowledge was the key to success in trading, why are 99% of traders failing in the markets if it was about the strategy? Okay? If you really think about it, if it was about the strategy, everyone and their mother would be profitable and driving Ferraris, right? And that's not the case, obviously. So that's the proof that trading is 90% psychology and 90% dependent on you, on yourself, on your decisions, on your nervous system, on your specific brain, on your specific behavior within the uncertainty in the markets. And that's it, okay? So many people can read charts and identify setups, but very few are consistently profitable. And the difference lies not in the strategy, as I told you before. It lies in the discipline to control their emotions and their nervous system to be regulated. It lies in having the self-awareness state that you need in order to control these emotions, in order to make crystal clear decisions while being under immense pressure within the markets, all right? So what actually makes most of the traders unprofitable is these two emotions right here, okay? First one being fear and FOMO. So fear of losses make you exit too early, like closing your profits too early, or FOMO, fear of missing out, drives you into bad trades because you are afraid of missing out on big moves happening, okay? Same for greed, okay? Greed turns winners into losers because you never take enough off the table. These people who are guided by greed, they will never close trades. They will hold onto winning positions basically forever until they finally get stopped out because they can't get enough. Okay, they're just too greedy. So in order to eliminate these emotions and get to a state of self-awareness and gain that self-control is to learn how to regulate your nervous system, okay? Because trading is a game of discipline, not chart patterns. Those who can control themselves will always lose, all right? So you need to learn how to train your brain into thinking in probabilities and not in outcomes, okay? So you need to train your brain to learn probabilistic thinking and not in outcome-based thinking, okay? So the biggest mental mistake in trading is letting single wins and single losses control your emotions. And to show you what I mean by that is, let's just compare the outcome-based mindset versus the probabilistic mindset, okay? So most of the unprofitable traders, like 99% of all traders, have an outcome-based mindset, okay? If they have a winning trade, they are happy. If they have a losing trade, they are sad, they are angry, they are upset, they get emotional or whatever, and they are at the mercy of every single trade. They are basically reactive and emotional to decision making. That means their emotions will always take over under pressure when they are sitting in front of the charts, when they need to make crystal clear decisions. They get emotional because they attach their mind, they attach their decision making to the outcome of one single trade. And that inevitably leads to tilt and revenge trading. So they basically become victims to the markets, okay? That is why 99% of all traders are unprofitable because they have an outcome-based mindset, all right? So contrary to that, if you have a probabilistic mindset, you will become profitable. Why? Because you will think in batches of trades over time. You will think in like 10, 20, 30, 40, 50, or even 100 trades, and you don't care about the single outcome of one trade. And you understand that losses are part of a profitable edge. So you don't try to avoid losses. Instead, you only ask yourself, did I follow my plan? And that's why I made that in bold, because this is the one single most important thing that you should ask yourself if you want to become a profitable trader, is that, did I follow my plan? Okay, this is the only variable that you can control, because you can't control the outcome in the markets. You can't control if your trade will be a win or a loss. The only thing that you can control is, did you follow your plan, right? So a profitable trader with a probabilistic mindset will always embrace the natural ebbs and flows, because he understands and he knows that his strategy doesn't work in any market condition, okay? So the thing is that there's not a single strategy out there that works in every single market phase or market condition, all right? There will always be phases or market conditions where your strategy will not work, and that's completely normal. And having a probabilistic mindset is also understanding the natural ebbs and flows that you will have during your trading career, okay? So, and the last most important thing is, profit is a byproduct of perfect execution, which means a profitable trader with a probabilistic mindset, he doesn't focus on the money. He focuses on executing his plan perfectly, and he understands that if he does that, the profit will naturally follow as a byproduct, okay? So you should not be thinking about the money. The goal is to get so good at execution and process that money becomes a natural byproduct, all right? So, and the last and most important thing out of all in the trading space is risk management, because this will help you to stay in the game. Let me tell you something. It is way more important to have a good risk management plan than it is to have a good trading strategy. Why? Because you can have profits in the market. You can be a profitable trader with a mediocre or even with a bad strategy, but a very good risk management. But you will inevitably lose money and stay unprofitable in the markets if you have a bad risk management with a good strategy, all right? So without risk management, you will never see how your edge pays off over time. And that is the one single most important thing that you need to understand over time. So trading is not about one single trade being a winner or a loser, because one single trade will not change your life. But what will actually change your life is 100 trades, 1,000 trades, where you stick to your strategy 100%, because then your edge can play out and you can actually become the profitable trader and gain the profits that you deserve, all right? So this is like a matrix where I will show you what you need or what your strategy needs in order for you to become a profitable trader. So on the left side, like here, you will see the risk to reward ratio, and here on the right side, you will see your win rate, okay? So for example, if you have a strategy with a 1-to-1 risk to reward ratio, what you need, like the win rate you need in order for you to be profitable, is 60% at least, okay? At 50% with a 1-to-1 risk to reward ratio, you are break even, okay? If you have a 1-to-2 risk to reward ratio, you need a 40% win rate only to be profitable. With a 1-to-3 risk to reward, you need 30% only to be profitable. With a 1-to-4, it's somewhere between 20 and 30%. And with a 1-to-5, you even only need 20% to be profitable. So the higher your risk to reward ratio, the lower your win rate needs to be in order for you to become profitable. Okay, and that is a very personal thing, because everyone's strategy is different, okay? We all are different. We are all different humans. We all have different personalities. So therefore, you need to find the right combination of both, okay? For example, my personal best strategy during London session, okay, has a win rate of around 60 to 70% and having a risk to reward ratio of 1 to 4, okay? That is possible because I'm only taking 1 to 2 trades per week, but that is my personal strategy. You don't need to necessarily do the same, okay? You can also have like a trading strategy where you take 1 to 5 trades per day with a 1 to 2 risk to reward ratio and a 60% win rate, okay? So this is very personal. That depends on your personal strategy or the strategy that you're actually currently trading, all right? So everybody's different, and you need to understand that trading is a very personal thing. And in order for you to become a profitable trader, you need to accept that. Because, as I said before, most traders are only unprofitable because they try to force themselves into sticking to a strategy that is not optimized for their own specific brain, for their own specific psychology, for their own specific behavior towards risk and towards uncertainty in the markets, all right? So, in order for you to become a profitable trader, you need to build your own personalized strategy, and that includes also defining your risk to reward ratio and your win rate that automatically follows if you just simply follow all your rules in your trading strategy, all right? So, my number one tip for you is first, build a large database from real trades, okay, backtest first, of course. And then if you do that, you will build trust in your own strategy, trust in your own process before you aim for big gains, okay? Yeah, and that's basically it for this episode. Episode number 3 will drop by tomorrow, so stay tuned, stay committed. Comment the word ready below this video if you finished this video. And yeah, see you tomorrow on day number 3.